but I want to invest in mutual funds. But it seems very confusing and very complicated.
Even I used to think the same, but not anymore.
Kaise?
So I found something that makes investment in mutual funds super easy. That too with a small investment of just 500 rupees. Your investment is managed professionally without you having to do anything.
Oh, but can you explain it a bit more?
Mutual fund is basically money invested by people like us, pooled together. The sum of money is managed by asset management companies. Now, every company offers a list of schemes, of course, depending upon the objective of the fund.
Right. So are you telling me that the pooled money gets reinvested?
Yes, in commodities, bonds.
Stocks, etc.?
Exactly. So the fund is managed by a fund manager who understands the market before he strategically invests the money to get high returns. And then the returns are distributed equally among all the investors, of course, after deducting certain expenses.
Oh, but how much are the expenses though?
Anywhere between 1 to 3%, and this is called the expense ratio of a fund. So now you see, the lower the expense ratio, better are the returns. Always remember this when you start investing in mutual funds.
Got it. Thanks. Let me ask you one more thing now that I've understood it so far. What are mutual fund units?
The units represent your holding in mutual fund. Now, mutual fund are divided into units that are allotted to investors.
Okay. So you mean to say that the units determine the value of the investment?
Right. But to know about the units that will be allotted to you as an investor, you need to understand a little more about NAV or net asset value. Okay, let me simplify it. NAV is the performance of the fund. For example, if you're investing in a mutual fund through SIP, let's say amounting to 500 rupees, you will be getting units worth 500. Got it? And if your NAV on the day of purchase is 10 rupees, then you will be purchasing 50 units.
Got it. Thanks, yeah. Can you tell me more about the types of mutual funds?
Of course. So there are 3 classifications of mutual funds. Number 1, equity fund. The money is invested in shares of companies in order to get higher returns of long-term investments, for example, small cap, mid cap, large cap. Second, debt funds. The money is invested in fixed income securities like government securities or commercial papers. They are relatively safer and are best suited for people who do not want to take much risk. For example, liquid funds, short-term, dynamic bonds, etc. And third, hybrid funds. The money is invested in both equity and debt. So it gives you best of both the worlds. For example, aggressive funds, balanced funds, etc.
Okay, but tell me one thing. What are the differences between stocks and mutual funds?
That's an interesting question. Okay, I'll tell you. Let's start with equity mutual funds. They are less risky, they are managed professionally by a fund manager, they are an affordable investment option, you don't need a demat account, and there are minimal transaction costs. Let's talk about individual stocks. They are riskier than mutual funds, they require a lot of research. They're an expensive investment option, you need a demat account, and there are higher transactional costs. अब हो गए इन्वेस्टमेंट्स के सारे फंडे क्लियर?
Yeah, thanks for all the information. I have so much clarity now. And I think I'm ready to invest in mutual funds.
Cheers to that.